Welcome to Next Gen Infomania. Smart news for a smarter generation. Delivering truth with clarity, telling every story with integrity, and bringing the world to your screen. One headline, one voice, one unwavering commitment to journalism that informs, inspires, and empowers. Let's be real, the global economy feels like it's skating on thin ice. Forecasts? Gloomy. Global growth potentially slumping to just 2.3% in 2025, a recession warning. Public debt? Skyrocketing towards 100% of GDP, levels not seen since World War II. Inflation stubborn, trade tensions are high, and there's a massive "what now?" in the air. So, is your money safe? As traditional finance shows cracks, crypto emerges. Could it be our lifeboat? Or is that just dangerous wishful thinking? Those economic warning bells are blaring. Major watchdogs see global growth slowing into 2025 and 2026 thanks to trade barriers, tighter money, and shaky confidence. The World Economic Outlook warns of record uncertainties and century-high tariffs. This isn't a bump, it's a potential earthquake. Inflation is a massive headache, stickier than anyone hoped. Rising wages, new tariffs, or geopolitical flare-ups could send it soaring again. In the U.S., some brace for inflation to peak in 2026, meaning painful price hikes. Persistent inflation devours savings, freezes business, and can spark unrest. And the debt? A global mountain over $324 trillion in early 2025. Public debt has ballooned and is still climbing. This makes economies fragile. Higher interest rates mean more spending on debt servicing, less on crucial services. It's devastating for developing nations. Add unpredictable government moves, and the foundations of a stable economy are trembling, setting the stage for crypto's big question. When the ground feels unstable, we look for alternatives. For many, that's crypto, often Bitcoin. Its core appeal? Decentralization. Unlike our money, at the mercy of governments, Bitcoin operates peer-to-peer. No single entity can print more, devalue it, or freeze your account. A tempting shield against government funny money or capital controls. Then there's the limited supply. Bitcoin is capped at 21 million coins, period. A stark contrast to fiat currencies. Supporters call it digital gold, preserving value when paper money loses punch. An asset with a fixed supply looks attractive against inflation. Accessibility and resilience are also key. The crypto market is 24/7 global. Unlike traditional markets, it's theoretically always tradable with internet access, a lifeline if financial chaos erupts. In countries battling hyperinflation, crypto has helped safeguard savings. Bitcoin's price has sometimes jumped on economic jitters and institutional interest, like Bitcoin ETFs, suggests it's maturing as a potential hedge. For those fed up with the old guard, crypto offers a vision of a more transparent, borderless, and individually controlled financial future. But hold on, that dream of a digital safe haven hits some ugly snags. First, insane volatility. Bitcoin can nosedive 20 to 30% in a flash, hardly safe. When markets panic, crypto often tumbles with other risky assets, like in the February-March 2025 drop. So much for a reliable hedge. Regulatory uncertainty is another massive shadow. Governments are all over the map, from bans to cautious embraces. Rules can change alarmingly fast. The EU's MiCA offers clarity, but the US is unpredictable. This creates huge risks. And don't forget market manipulation, scams, and hacks that can wipe out fortunes. What about the speculative bubble argument? Critics say many cryptos lack real intrinsic value. Prices are often driven by hype. You only make money if someone else pays more. When panic hits, hype evaporates. Analysts warn of catastrophic price drops if the economy sours or regulations hit hard. Bitcoin's 2025 performance revealed weaknesses, and its supposed correlation with gold is shaky. For many, crypto looks less like digital gold and more like a high-stakes tech gamble. So, the verdict? The crypto debate rages. Believers champion Bitcoin's fixed supply and decentralization as a shield against inflation and government overreach. They point to institutional interest, like Bitcoin ETFs, as proof it's maturing. Some analysts still forecast huge price jumps, convinced money printing will make Bitcoin more attractive. The digital gold narrative persists, but skeptics fire back, pointing to wild price swings. They argue it's a risky bet, not a safe haven, highlighting how Bitcoin often syncs with traditional markets. Concerns about its lack of real value, regulatory threats, and market manipulation are huge red flags. Experts stress we have little data on how Bitcoin performs during prolonged high inflation, unlike gold's millennia-long track record. One expert bluntly said, "There's no historical data supporting Bitcoin as an inflation hedge during major crises because it's too new. Even available data is spun. Some studies suggest Bitcoin can hedge in limited scenarios. Others say gold is more reliable. Its COVID-19 performance was mixed. Surges, but also sharp drops mirroring market panic. Crypto's behavior is complex and evolving. It can be a lifeline in specific situations, like a collapsing local currency, but its role as a global shield is unproven and debated. That gamble aspect? Hard to deny. Cryptocurrencies do have appealing unique characteristics. Decentralization offers a buffer against government interference. A limited supply, like Bitcoin, is, in theory, an inflation hedge. Its 24/7 global accessibility can be vital in specific crises. So, for certain individuals, in particular circumstances, crypto might offer some protection. However, the idea it's a foolproof safe haven for everyone during a widespread meltdown is more hope than hard evidence. Extreme volatility is a massive hurdle. An asset losing huge value overnight isn't stable. Its tendency to move with other risky assets weakens its diversifier claim. Regulatory uncertainty looms large, and questions about its real value and scalability in a global crisis remain unanswered. Gold has millennia of history as a store of value. Crypto is the new kid, largely untested and dire, prolonged economic storms. While some call it digital gold, its behavior is closer to a high-risk tech investment. Big potential gains, but also big potential losses. It could be part of a diversified strategy for those who understand and can stomach the risks. But relying on it as your primary defense? An extraordinarily risky bet. Decentralized tech will likely shape finance's future. But for now, crypto isn't a magic wand. It might offer useful tools, especially for the vulnerable, but it's not a simple solution to complex global economic problems. The quest for financial security in a wobbly world is endless. Cryptocurrencies are fascinating and potentially game-changing, but not a guaranteed lifeboat in stormy seas. Understanding their potential upsides and very real dangers is crucial. Always do your own research, stay clear-eyed about risks, and keep a healthy dose of skepticism. The next collapse may or may not be near, but being informed and prepared is always your best defense. Thanks for watching NextGen Infomania. Please do like, share, and subscribe. Stay tuned for next video.